Bismillahirrahmanirrahim. I am Muhammad Asif Chaudhary and I am working on tax avoidance. Being the student of tax avoidance, today I realize that the people who are not aware about the BEPS, I will give the awareness regarding the BEPS. What is BEPS? Base erosion and profit shifting. What is base erosion and profit shifting? Means that you are earning profit from other countries and shifting profit to other countries. There are the problems of the taxation. Being the student of tax avoidance, the BEPS is my subject. I am working on it. I am Muhammad Asif Chaudhary and the Institute of Tax Professionals invited me for that topic. What was before BEPS? There were a double taxation treaty between the different countries as one country, one non-resident is working in one country and earning a profit and shifting that profit to its motherland or its home country. Then he gives the taxation in the working country and profit earning country, and then he takes the profit in his base country. Then he also give the taxation, or the country demanded the taxation from him. For that purposes, to avoid the double taxation, there are different treaties between different countries, that if a taxpayer pay a tax in one country, then he will not be tax will not be levied on him into the other country. There were before BEPS there was a double taxation treaties, and originally meant to avoid double taxation. The purpose of this was that to avoid the double taxation, the person while earning the income, he will give a once tax for one time. It is always source country versus resident country. As I explained before that, the source country is where you earn the profit, and resident country where you are the resident. So if you pay the tax in one country, then the tax will be exempted in the other country due to the double taxation treaties. UN model and treaties versus OECD, the organization of the organization from economic cooperation and development. Firstly, it was the problem of underdeveloped country or developing countries, that the profit was shifted from their countries to another country. But with the passage of time, it becomes the problem of for the developed country, because the companies shifted to their head offices are registered in the offices where are the tax havens, and they cannot pay the taxes due to the they pay less taxes due to the low rate of taxes. Then the developed country also worried about that. The companies are shifting their offices in tax havens and avoiding the tax. It was illegal, but it was avoiding the taxes. Therefore, the OECD worked on BEPS. Eventually led an issue of double non-taxation. As there is a double taxation, there was the problem of double taxation. There was also the problem of non-double taxation, that the countries they set up their head offices or their base registered their company in the countries which are exempt from taxes. So they did not pay tax in the base country, or non-paid in the resident country, nor paid in source country, or nor paid in the resident country. They avoided the taxation by non-double taxation. And then the emergency of tax avoidance strategies, because due to the tax avoidance strategies, all the organizations going to the tax haven countries. Emergence of tax haven, as I explained before, what are the tax havens? The countries where the tax rate is low than the actual, than the competitive countries. Therefore, the most of the companies shifted to tax havens. BEPS, base erosion and profit shifting, years 2015, when the digitalization starts and the companies spread all over the world, and as due to the digitalizations, the company earns the profit from different countries, like from developing countries and developed countries. but they shifted all the profit in their base country or resident country. Then the problem was started for the source countries, that their profit, the company earning profit from their people, they shifted to their resident country. For that, they are facing the problem of loss of the taxation revenue. Global initiatives by the OECD and G20 countries and identification of the various issues regarding the tax avoidance, and there were the 15 points to issue identified. The BEPS issued the 15 point on which the Organization of for Economic Cooperation and Development started the work on these 15 points. I will discuss with you what are these 15 points for the BEPS. The various issues that were identified, as I explained, that being I am also the student of tax avoidance and my PhD is in tax avoidance, therefore it is my concerned subject, and I want to aware all over the world and OECD for the relating to tax avoidance. Then the need to less the tax gap between the various jurisdictions. It is also a suggestion that as there is a lot of gap between different jurisdictions, and therefore the companies try to move to the tax havens instead of the higher rate of countries. And there is a suggestion that if all over the world the tax rate may be the same, then the concept of tax havens and profit shifting will be reduced. Bad allocation of taxing right between the countries, as therefore the different countries make the treaties between themselves to avoid double taxation. But if there is a difference between their rates, their rate of tax, it creates a bad allocation between these countries. It is always a source country versus resident country. Absolutely right, because the source country is on a right that if you earn a profit from my population, then you should pay taxes to me. But the resident country has the claim that as it is my company and it will give taxes to me. For that reasons, it is working on that, and there are the 15 action point of the BEPS that are the important, because when we will do a work on these points, then the tax avoidance may be reduced. I think it will be reduced when all the countries will go to a one page, but the different countries are not going to a one page. As the tax haven says that we are a tax haven, it is not our receivable, but when all the companies go there and earn profit more from all over the world and pay them the taxes, they are earning more taxes. They are not agreed with the other countries whose tax rate is higher, like the tax rate of Pakistan and India is very high instead of the other countries. Then the tax rate should be reduced by all the countries. What are the 15 action points? Point 1, tax challenge arising from digitizations, because due to digitizations the countries, most of the companies earning profit from the all over the world from the companies. Therefore, it was the process. 3 important phenomena facilitated by the digitalizations, that is the scale without mass, reliance on the intangible assets, because there is not any tangible assets that it was saying that we are working there that country. All the assets are most of the intangible assets, and certainty of the data is also a problem. Action 2 is that neutralizing of the effect of hybrid mismatch arrangement exploit differences in the tax treatment of an entity or instrument under the law of the 2 or more jurisdiction. As because the treatment for the different countries is different, and in the developed country there are all the things are so documented that it is not possible for the companies that they avoid the taxes. But in the developing country, there is no any documentation, and the problem is that the most of the companies are avoiding taxes, and even they avoid taxes and evade taxes due to non-digitalizations. Therefore, it is the problem that there is the different laws in one or more tax havens. Action 3, controlled foreign company. Taxpayers can strip the tax base of their company of the resident, and by shifting income into the foreign company that is controlled by the taxpayer. As the controlled companies make their subsidiaries, which works all over the world, as all the companies' subsidiaries are controlled by the foreign controlled company, then it problem arises that they shows that we are giving the what are the expenses of the mother company, and they take some inadmissible expenses relating to the mother companies, as like advertising. We can say that one company is advertising in lower developing country, but it is taking benefit to the developed country, but they take the expenses, claim the expenses in that developing country to reduce taxation. Action 4, the limitation on the interest deductions. Multinational groups may achieve the favorable tax results by adjusting the amount of debt in the group entity. It is also one of the tax avoiding tactics, that the companies, the mother companies or multinational companies, give loans to on the higher rate to their subsidiaries, and subsidiaries claim the debt expenses. It is basically the income of the mother company, but it is treated as a tax of the subsidiary company. Therefore, subsidiary companies are claiming more debt services expense, and the income reduces, and the tax they come in the low slab of taxes. And action 5 is harmful tax practices. Review of preferential regimes in order to determine if the regime could not be harmful for the taxpayer base of the other jurisdiction, because the tax practices in the different countries are different, and in the developed countries it is, I think, that are the also developed, and there is less loophole. There are the loopholes even in the developed countries, the tax is avoided, but there are the low loopholes. But in the developing countries, the tax practices are different, and there is harmful sometimes. Therefore, it is also a point for the BEPS action. Action 6, prevention of tax treaties abuses. That is a very good point, that treaty shopping typically involves to attempt the persons in indirectly assess to the benefit of tax treaty between two jurisdictions without being a resident of the one of those jurisdictions. It is a very good point, because some countries, some companies are established in two different countries, where it is there is their base country, not in their resident country, but in different countries. Like if there is a exemption between the taxation of two countries, that is like China and Pakistan, maybe the Chinese company are exempt from taxes. One of the other countries company like US, Japanese company establish their office in China, that they will not be as being the tax treaty, the tax is exempt on the both countries, but the company is basically resident from the US, but they establish in China due to avail the benefit of tax avoidance. That is the point 6. And action 7, permanent establishment status. Tax treaties generally provided that the business profit of the foreign enterprises are taxable in the jurisdiction only to the extent of the enterprises has in the jurisdiction a permanent establishment to which the profit are attributes. Because the permanent establishments are, if the establishment is established in a developing country and it's earning a profit from the jurisdiction of that country, developing country. But what they do, they avoid taxes like the permanent established do the transaction at arm's length, and they capitalization, thin capitalization, and other situations are used to minimize their profit and pay the taxes in the resident in the base country or where it is earning the profit, but take due to some arm's length and other thing, they take the profit in their base country. And in action plan 8 to 10, transfer pricing, ultimate beneficial owner, and tax avoidance. That is concerns with determining of the conditions and including the price for transaction within the MNE's group, resulting in allocation of profit to a company with the groups in different countries. The arm's length principle, as I already explains, that the companies do the transactions with their associates, and to avoid taxes they give the benefit to their associate in different countries, and transfer pricing is also one of things that they transfer their profits to other countries while using taxes tactics of tax avoidance. And action plan 11, BEPS data analysis, increasing the quality of data and the analytical tools available. One thing is that due to the non-availability of pure data in developing countries, like I am doing research, or I am analyzing the data of underdeveloped countries or developing countries. There are many loopholes in the authenticity of data, but the data should be authentic, the quality of data should be good for analysis, and tools should be available. And the action 12 is the mandatory disclosure rule. The design of mandatory disclosure rules of aggressive taxation planning scheme, because they avoid the taxes aggressively. If they go on the edge of the tax avoidance and started the tax evasion even. That is the action 13, country by country reporting. The address the lack of quality of data and corporate taxes, as I explained earlier. And action 14 is the mutual agreement procedure, the fast pacing of already providing the mechanism for the proper application and interpretation of the tax treaties. As with the mutual agreement, the tax treaty should be revised, as there should not be a loss for any country. It should be some win-win game, that every country will take the benefit from where the profit earned and which company maintain. Action 15, multilateral instruments allow government to modify the existing bilateral tax treaties in the centralized and efficient manners to implement the tax treaty measures developed during the BEPS projects without need to explore the resources renegotiation each treaty bilateral. As I